Hurley Investments market commentary of May 5th, Cinco de Mayo. Also, more importantly, Kevin's big birthday. Happy birthday, Kevin. He'll get a kick out of that listening to it tomorrow. Um, yes, it's also Cinco de Mayo. Again, more importantly, Kevin's birthday. So I figured I would take over tonight and give him the night off. With you tonight is Keeve Bybee. Good to be with you guys. It's only been a couple weeks, so it's good to be back. So one of you, and I'll give you the courtesy of not calling you out by name, but one of you said or took issue with my claims and the things I quoted from Ben Shapiro, the conservative talking head, on his critique of the Trump tariff percentages that he was blaming on other countries. And apparently, some numbers were sent to Kevin, but Kevin never showed them to me. Just said that there's there's a little bit of disagreement on those numbers. So let me go over this really quick one more time. How are tariffs not those scary high percentages quoted by Trump? So here's the thing. There is a difference between individual goods and products which may have high tariff rates. Give it a comma right there, another comma right here, and the total average across all goods a country might levy on our country. So, which means, can there be huge tariff percentages on certain dairy products from Canada? Without the average of all products being very high. I think the dairy one I saw somewhere on Canada was like 230%. 230, let's just go with that because it doesn't matter anyway. But we might not be importing a whole ton of dairy from Canada, or at least what we do import is a small percentage of the total products that we import. So if dairy is, like, making this up because I don't know the actual percentage of all of the individual things, but if dairy is something like 2% of the total of all, get my caps lock on, products imported from Canada, then that 230% is not a meaningful part of the average of all the products and goods we import. Another example was Vietnam and some of theirs, but it doesn't matter what country you look at. If they have one or two products or goods that have a high tariff rate, it doesn't necessarily mean that their whole amount, uh, that small amount is a inconsequential part of the total tariff they charge us across all of their goods that we import. Hopefully that made sense the way I said that. But again, if it's a 2%, if dairy in this case is only 2% of all those products, I'm sure it's probably more than that, but whatever. Then it doesn't matter if they charge us a tariff that is huge if it's such a small part of all of the products we import. So once again, the problem was that the Liberation Day numbers being thrown around as tariffs percentages was actually trade deficit percentages. So they were using trade deficits with countries, Vietnam, which was, like they said, it was 90 something percent. That's not the actual tariffs they're charging us, it was the deficit. Maybe I should learn how to spell deficit correctly. And so once again, deficit is not the same as tariff. Deficit is just how much we're buying from one country as opposed to how much that country is buying from us. Singapore, we have a trade surplus with, so there isn't a deficit. They're buying more of our crap than we're buying of their crap. And yet we still leveraged or threatened, really, a tariff, a tariff on that, on Singapore. Go figure. Anyways, it's all good. Look, that's the way it was chosen to go about it, to get everybody up and moving, to get some heads turning, and to start a big negotiation with lots of different countries really quickly. Again, that's starting to happen, and wouldn't it be nice if we had something to say more on that? but we don't yet. I don't think there's any deals that have been made, just a lot of talking, and so we'll see what happens. So we got a bump from the pause on tariffs. That was like, you know, beginning of closer to the mid part of April. We got a little bit of a slump after that, and then it kicked back up. So I want to know, why did we get that bump from the pause? Oh, excuse me. Why did we get the follow through? Why is the market continuing to head higher? Yes, we know it. Certainly it's continued positivity that trade deals will get done. What do you guys think? Maud said better than expected earnings. I like that. That's definitely true. Any other thoughts? So let's get into the big picture because it answers some of those questions I posed. Why are we getting a follow through instead of a kind of a topping out against a moving average? Because we really haven't gotten any more news on any of this stuff. It's just been paused. There hasn't been really any agreements or talk about things getting really agreed upon with any one country, that at least that I've seen. So what else could it be? So let's see if I can make this a tad larger. We'll zoom in here just to help you guys see a little better. All right, there are 3 points. The Fed Reserve is not cutting rates anytime soon. Stock market has rallied on hopes of future rate cuts and easing trade tensions despite signs of softening labor market. Both the Fed and analysts are in wait-and-see mode as mixed data and tariffs impacts create uncertainty about the timing and likelihood of rate cuts. So in particular, this middle one, we can go down, talks a little bit about the inflation and how we've been basically near zero interest rates for such a long time until that changed in 2022. Talks about forward earning per share estimates. These are estimates, meaning what people think in the future, what companies think. And then we come down here. I've got a question. That might be true, Jim. Um, to be honest, I don't think they had any. They never really focused on any important issues anyway. All right, so the 8-session winning streak, it gained 8.7 over that span, which has included state of labor reports showing the following. Talks about a few of the labor reports, but the important one was one that came out last Friday that didn't break any wonderful records. It wasn't crazy good. It was just okay. April employment situation report, which featured a 177,000 increase in non-farm payrolls and a steady 4.2% unemployment rate. That was released on May 2nd, and it quieted some of the growth employment concerns that had been building on the back of the aforementioned labor reports. It also exposed that growth concerns and the ideation that the Fed could cut rates sooner than later have been part of the market mix. So, in other words, not only has the issues been tariffs and inflation, worried about inflation as a result of tariffs, but also in that mix has also been the employment situation. And the reason in this article that they believe that's true is because Treasury yields spiked after the release of that May 2nd report, and the Fed funds futures market, which had been pricing in 4 rate cuts before the end of the year, next one coming in June, downshift to expect only 3 rate cuts, and the next one coming in July. Stock market rallied on the report, getting the best of both worlds. First, the employment report tempered recession concerns. So it was good enough to know that the unemployment rate hadn't risen, but it was also crappy enough that the report wasn't so strong as to make the market think there won't be any rate cuts this year. So, interesting situation where a dull number that isn't extremely positive but isn't really negative either was like the best thing to happen. And again, it tempered concerns of unemployment and gave us hope in the market that there will still be rate cuts. There's still a good likelihood there will be a few amount of rate cuts. And I would agree with this too, that 3 rate cuts is going to be very ambitious. Imagine people talking about 4, but in any case, they say the writing's on the wall for the Fed funds futures market, and that writing doesn't spell inflation, it spells weak growth driven by weakening end demand that is a consequence of a weakening labor market. Case can be made, though, that there won't be any rate cuts if the tariffs drive up inflation, blah, 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 blah. Basically, they're saying because the labor market is weakening slightly, that gives us good hope that the Fed is still going to give us some rate cuts. Nothing fancy, but pretty interesting. We've had Apple earnings, didn't do so hot. We've had Boeing, basically just hoping that the FAA is going to allow them to cook up more planes. Bank of America, JP Morgan are banks. I guess we don't have JP Morgan up here anymore. Did excellent. We've got Baidu coming up next week. Today we had Ford, and we have Disney Wednesday. Google did okay, and they dropped. Didn't do initially what people wanted, and started coming back out when we had Meta earnings. that were exceptional, both part of the same sort of advertising business model. And then we have coming up our chip stocks. Micron's always way out in the middle of nowhere where no one expects anything. Nvidia just at the end of this month. Don't care about Target, don't care about Under Armour. Visa, I like it, but it's overpriced. Verizon, not impressed. Walmart. Walmart might have been one that would have been interesting to do something with initially with the tariffs. It's bounced back so nicely already. Still has some room to run, but the thinking is Walmart has such a broad base of um, places that they draw goods from that they are well situated to deal with any tariff issues um, that might come up. Interesting though, they were already kind of down before the tariff issues really ramped up, and they recovered fairly quickly, a little quicker than most other things I've seen. So interesting and something to keep an eye on. Block XYZ did completely garbage on their earnings, and one that we're looking to get out of because it's just not investable right now. And our puts that we had through earnings we'll just leave them on, and we'll have the plan right now is to have those stocks put to someone else as our puts close in the money. And those shares will be off our table. All right. Get a drink of water. Where will our markets end this week? I'm feeling higher. Each of our indexes are ticking through up through the bullish technically. That is our S&P. Each of them also are above, closing above 50-day moving averages. NASDAQ, a little closer. My thought is probably somewhere where it is right now is where it will end for the month. Reason being is I think we'll probably see a testing of the 200-day moving average on each of these indexes. Not sure what we just discussed on the interest rate scenario and the weakening labor market is really going to push us above that, at least not alone. And maybe that's where some of the other things like more positive tariff news, some other um, positive interest rate talk from the Fed when they meet, and stuff of that nature. That's what might push us above, but I feel like we're, at least for a little while, we're going to be bouncing between the averages until we get some of that good news. More good news, I should say. I'm saying again, 1% is where we'll end up. I'd love for it to be more. Earnings, we have which is Income Realty, which is a pretty decent little income producing ETF that has real estate holdings. And of course, Ford. Let's see how Ford did. Where did you go, briefing? Oh, here it is. Last week, let me get down to Ford. Was in, thank you, Mod. Um, After hours, Ford down. That's not a crazy amount. What is it after hours? Let me get my app out. It is down, yeah, 2.46. All because they don't want to give guidance, which, you know, kind of a tough situation to be giving any realistic guidance. I do think, though, one of one of the biggest industries that Trump is trying to protect is the car industry. So any deals there, I would assume, are going to be starting, or at least sooner than later, with the um, auto industry. Yeah, well, I agree, Maud. They can't give guidance. They could if they wanted to, but it's silly. There's too much uncertainty. Um, Destroying the car industry. It's interesting because what is it, United Auto Workers, they love the idea of these tariffs. They love it. They think it's going to help. And but again, it goes back to negotiating. Put a big scary number on some things, get some negotiating to the table. We already have what is it called? Uh, it's the South Korean car brand. It's not Kia, it's the other one. Somebody help me. Having a brain fart. Hyundai, thank you. So if he can convince more of these companies to build or commit to building, then that would bring more jobs, at least the manufacturing, in to the US. Hyundai committed a big amount as they're early on just trying to get ahead of any of those issues and wanting to avoid tariffs and that sort of thing. And, um, you know, several others had started to have plans and have moved manufacturing into Mexico. If there's a part of manufacturing, again, I don't think Trump is really trying to bring iPhones back here to be manufactured. It just won't, the numbers won't work. But there is a realistic chance he can get manufacturing on automobiles back stateside. And obviously it takes time, but any news of new plans and new plants being moved into the US is going to be a positive. Yes, I know. Robotic arms are going to do all the work. Of course, there's certainly going to be trying to keep costs down by having more um, computers and robots do a lot of the work, but uh, still will have to bring some jobs back. American labor is not cheap. I agree, which is why they're going to try to use a lot more robotics to lower the cost. Oh, Bill says takes people to build factories. Good point, Bill. Well, Mod, it still brings some jobs back. It's not going to be all automated. Maybe in some distant future, maybe not that distant. Who knows? We got AI doing crazy things, but um, no, it can't all be automated. What is the point of bringing manufacturing back? To create jobs. What did Warren Buffett say? Warren Buffett said it best. Don't stop on me now, Maud. I want to know what he said. Regarding tariffs, you and Kevin should listen to what he had to say. I'll check that out. Um, Bill said, "What? Who monitors and provides upkeep on robots? People." Great point. I know a lot of some CEOs in the field of logistics and shipping and that sort of thing, and a lot of them have found in competing with Amazon that they had to use a lesser percentage of uh, robotic work and a little bit more percentage of manual labor. Otherwise, there was too much downtime. Um, there was too much downtime on the manufacturing, the factories, because of robots needing to be fixed and upkept and stuff like that. It might be a one person to 1,000 robots, um, but again, based on what I just told you, that's probably not what the case is really going to be. Don't get me wrong, I don't like tariffs in general, um, so I would agree on what Buffett likely said and on trashing tariffs, but I do think it's important that we get some fair trade. And I understand, again, maybe there was a better way to do it than Trump did, but he got an awful lot of people's attention, a lot of countries' attention, and the working and negotiating is on the table. And I think if we can get even more fair trade than was had before, then we'll come out of it even better. I'll do that, Mod. All right. Let's see. I actually didn't get the econ reports on. Let's see what we got. Calendars, economic. This week, did the ISM today, trade balance tomorrow, since we're talking about trade. MBA mortgage. We've got an FOMC rate decision on Wednesday, which isn't going to do anything, but it will be important to hear what they say. And then we have Thursday, our labor numbers. Oops. All right. I loved the discussion. Thanks, Maud. Thanks, Bill. Interesting things to talk about. I, I'll reiterate again, I really don't care who is right about what. I honestly don't. I don't care if Trump's right. I don't care if he's wrong. I honestly could care less. I only care about what the reality and facts are. And of course, with any political stuff, it's, you have to wade through a lot of BS and rhetoric and nonsense. But if we focus on the facts and what we know for sure and divide that from all of the rhetoric, then we're at a better place to make judgments and do a better job in assessing where things are at and where they're going in our stock market. I agree with you, Bill. Thank you. With you there. All right. Any other questions? Of course, the big news, and again, Maud, I'll have to listen to more of the actual um, talk in the Berkshire Hathaway report. But obviously, the big news was Warren Buffett saying that he is stepping down as the CEO, and apparently he's not retiring, but he's going to be the chairman of the board, and his son is taking over as the CEO. So pretty interesting little article. 5,502,284% total return. Pretty incredible. That's over since 1965. Pretty amazing. S&P in comparison, it's only up 39,000% over that time period. He has destroyed that in comparison. Interesting article. That was really the most interesting part, though, at the beginning. Berkshire Hathaway. Let's see. There was something else. Anyways, most of you don't care about soccer, but it's my sport. And CNBC did a global valuation on the biggest soccer clubs. And let's just scroll down here. You got the usual suspects, Real Madrid up on the first spot, $6.7 billion value. You've got Manchester United at 6 billion, Barcelona at 5.65, and Liverpool at 5.4, Manchester City at 5.2. Let me get the actual article because I want to see that table that it's not really showing us. Okay, here we go. That's much better. So, if you notice, get my little pen out here. Debt as a percentage of value. Real Madrid's 19%, Manchester United 11%, Barcelona quite high. Liverpool 3%, Manchester City 0%. I'm not I don't know as much about Bayern Munich, but 0% for being the fifth largest, pretty impressive, except when you know that they've got an oil-rich sheik bankrolling their stupid club and buying over the last many years the most expensively accumulated uh, club as far as the players they bought, and of course they have no debt. Liverpool, which is the club near and dear to my heart, who is winning and has solidified their win of the Premier League in England this last Sunday before last, is owned by these gentlemen, part of Fenway Sports Group, the same group that owns the Boston Red Sox. And actually, interestingly enough, part owners in AC Milan with the New York Yankee Group. But all of their revenue and value that's been created in this club, which has a rich history, but when they took over, probably closer to like 20 years by now, 15 some odd years ago, it was on the verge of bankrupt, really poorly run, and Fenway Sports Group scooped it up on the cheap and has made it into the fourth largest club in the world, all organically, as you would assume a business makes money, not having some rich oil rich country chic bankroll everything. Pretty phenomenal. All right, I know most of you don't care, so we'll move along from there. Pretty interesting list, though. Last article on generative AI and how we're at a place where we can be regenerative. Um, if that makes any sense to you, then this will be an interesting article for you to read. If it doesn't make any sense to you, might be important to read. Kind of an interesting opinion. And that's really all I had for you guys. And just another article on an order from Trump to boost domestic drug manufacturing, because we got all those big pharmas producing drugs elsewhere. Um, Good one to know about. And that does it for me, guys. Any other last thoughts or questions before we call it a night? Doing that. What are we doing? We have good earnings. We're taking puts off. We are watching FOMC on Wednesday and watching more earnings and adjusting as needed. Following bullish trend. All right. Not seeing any questions. Great discussion tonight. I love the back and forth. That's what we need. Thank you guys so much. Have a good week, and we'll see you next time. Kevin should be back, I think. And until then, have a good night and take care.